Focus on that fair value gap. Do you see anything that stands out? Anything that's important? Pause the video, think about it. Here is your fair value gap. This is what you're used to seeing. Algorithms, high frequency trading algorithms, will take that inefficiency there and bust it up into quadrants. This is the anatomy of the fair value gap. That entire range, you put it in quarters. So there's a quadrant from the highest to here, midpoint, lower third, low. Those levels, if we take those levels and add them to the hourly chart, the low here, the fair value gap here was at the low end of what? The high, upper quarter, midpoint, lower quarter, low of that daily fair value gap. Look where that fair value gap 60-minute resides, right at that lower quadrant. I only want to see it trade up into that. I don't want to see it go above the halfway point, because if it does, that means it's probably not as bearish as I want it to be. So the best short positions are going to occur at the midpoint of that gap on the daily chart, which is that dashed line, and the low. So it goes up to the upper quadrant, and it's the 60-minute fair value gap. High frequency trading algorithms are going to trade that right there, and market drops lower. This idea, you're going to couple that with what I've been teaching about how when prices don't reach to a specific level and fail, it indicates exceedingly bearish or exceedingly bullish. And on the 50-minute time frame, you can see it here, runs up, hits that lower quadrant level of that fair value gap on the daily chart, and the premium 60-minute fair value gap, which doesn't look like a fair value gap now when we look at it on the 15. It's important to move from the top down, higher time frame, lower time frame. More specifically, here is that higher high that's formed in between these two time periods, these vertical lines. Look at that. The S&P made higher highs there into the area I was drawing your attention to, and it's the lower quadrant on that daily fair value gap. And at the same time, the dollar index was unwilling to do what? Make a lower low. See that? So that's SMT. USDX dollar index. SMT. It should have made a lower low there. It didn't. So when it does these things, that is what? That's flashing. Smart money's going to go short here. And what's it going to aim for? Sell side. Why? Because it took the buy stops above here. So if they're going to buy, if they're going to sell short to the buy stops here, what are they going to look for to get out? Sell stops. They're residing right below there. Where's the market go? Right there. And then what does it do? Right back up to the fair value gap on the daily chart. Bounces there, hits it here, new week opening gap. Go and look at Twitter. And then does what? It goes lower, obviously. And zoomed in on a 5-minute chart. There's the details again. Beautiful higher high into a level I was calling. And there's the SMT divergence telling you it's going to drop. Back to our chart here with all the details. Okay, so we're going to use these levels here now when we drop in. Hourly chart here with all the pertinence. Old low, consequent encouragement of the wick, order block, mean threshold. And we break down through it. And there's that hourly gap. And here is that consequent encouragement of the daily chart wick. And the market goes back up to it here, and then prices down to that old order block and low on the daily chart, which is 3948.75. Zoomed in here on the hourly chart, you can see how we just went up in the fair value gap. You know now what that was also here, the daily fair value gap lower quadrant, and then once it hit it, repriced lower, right back to the 4023.5 level, which is a wick, consequent encouragement. Consolidation looks like a bullfight to retail traders, and then just rolls on down to a level that completes it. The sell program for near term on a Friday, and then with that divergence down here, which we'll go into. The market trades up higher here also, and that fair value gap, higher into this high here, but look what's occurring here in the NASDAQ. NASDAQ was doing what? At the time, NASDAQ was giving you the S&P divergence. It did not make a higher high when Dow did, when the S&P went into our objective. That is smart money going short, and the market does, in fact, reprice lower. And in the afternoon, when I was prompting everyone on Twitter that there was a divergence of the dollar and the S&P when it made its lower low, you can also see that being confirmed in the averages. So when we filled that gap on the daily chart here, you can see we made the lower low in S&P. We did not make the lower low in Dow while we made the lower low in NASDAQ. We are done for the daily range. It's going to reprice go where? Buy side liquidity. That's here. We ran above it here, retraced, fair value gap, rally again, consequent encroachment of the gap here. And notice it didn't just go up to this low here where what? Support broken turns resistance? No. It digs up to an algorithmic reference point, which is the consequent encroachment of this gap.